Good morning, everyone. It is Monday, March 29th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice, and we are going to talk about some potential hot spots in the markets for this Monday. Before we jump over there and get into it, I do need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, now that we got that out of the way, the stories that we're going to talk about today, and I'm flipping Brian's charts as he's still fiddling around with stuff. One, the story over the weekend, everyone caught it on Friday. There was a very large hedge fund, Archigos, that was very highly leveraged, defaulted on margin calls, and they had to go through some forced liquidation of stocks. Now, while that's one hedge fund that blew up, they had to dump tens of billions of dollars of stock. They had to clear it out. I know that's going to cause some problems with certain of the entities where they were being loaned money. So Morgan Stanley, Goldman Sachs, and Credit Suisse all having some challenges around this story as well. The question really is, are they done? And are there going to be any more? And it certainly spooked people when you've got somebody just out there having to puke tens of billions of dollars of stock. Just as an example, Viacom CBS stock, where they had a large position, they took it down 25% to liquidate that position. Discovery, they took it down more than that, 27%. So it certainly spooks the markets, can impact the equity indices when you've got a number of stocks making large gap moves like that as someone is forced to sell. So yeah, if you're ever curious about leverage and hedge funds and how people can absolutely get burned, you hear about how much money they can make, but then all of a sudden when they lose, the bottom just falls out. Good lesson in managing your risk. Yikes. So we're going to talk a little bit about Nasdaq today. The ship that looks like it's stuck in the Suez Canal, they're finally shaking that free, or getting close to it. But we're going to talk about oil.
Refloating.
Hey,
I don't think they want to shake it.
Shake it free. Okay, so they're refloating that.
Yeah,
ship.
that's the politically correct. It's refloating.
Yeah, I gotta use the right terminology.
Exactly.
All right. So we're gonna look at the Nasdaq. We're gonna look at oil, and I think we'll take a look at the metals a little bit, just because there's been some activity. We're looking at the hot spots. So Brian, you want to kick us off?
Yeah. So, and here's the thing. I just want to make sure everybody understands here too. When we're talking about hedge funds and things on this level, you really need to make sure that you take a step back and kind of realize the type of market that we're in, okay? And in particular, you know, everybody would see this and say, oh my God, there's going to be a huge gap today. Everything's going to be negative. Expect the markets to crash. But when you look actually, like in this article, it talks about how there was a number of different hedge funds. Because again, when we talk about risk, they spread risk. Like insurance, it spreads risk over a large pool. You can see inside of this article on Daily FX, they talk about it, how Credit Suisse is speculated to have lost between $3 billion and $4 billion, and Nomura in the region of $2 billion. Now you would say, oh my God, that's so much money. Billions of dollars. We couldn't get a stimulus pass for $1 billion, right? And then also, you know, you look at the next line, it says, several other lenders to Archigos, including Goldman Sachs and Deutsche Bank, said that the fallout from the hedge fund's default will have no significant impact on earnings. They plan for these type of things to happen as well. You would think, how are they going to stay in business? They just lost $4 billion. It's not even going to affect their earnings. They're not even going to necessarily see it. It's a loss that is on their books. And again, remember, their losses are counterbalanced by their wins, right? Because it's a trading account. You have wins that go up, losses that go down. And again, it's meant to counterbalance. They just need to make sure that they're green at the end of the year. And again, even with these losses, you'll see billions of dollars worth of profit. That's just how the industry works. And that's why you need to understand, you know, being individual people, we are the little fish in the pond. So that way, that's the reason why you'll see people shy away from things like penny stocks, right? because the liquidity is not there, it's a market that can be manipulated easy, right? Something like the S&P is not going to be manipulated as easy. Can it be? Sure. But that's why what you're trading really matters out there. And again, understanding and controlling your own personal risk is important. Yeah, carrying that over into the NQ. We know that the Nasdaq has been at risk, right? There's been a couple headlines this morning. There's a headline over here that Biden is now threatening more tariffs. Like tariffs were bad, but now Biden's like, oh no, we're going to do tariffs too. It's like, wait, I thought they were bad. But now we're talking about doing tech tariffs against one of our closest allies, which is, I don't know, kind of surprised by that one, but warned he could put up to 25% tariffs on the UK tech firms. It's like, oh, here we go. Well, the NQ is the tech sector. So with Archigos not being as big of a deal, with people being manipulated in that realm, and now we're talking about tech, throwing tariffs on our closest ally. Again, NQ just bounced off a 15-minute level, and you can see it's a level we marked off, and we've talked about it in the past. On the 30-minute, you can see it was one of the little kind of drop, sideways movement, drop down again. It hadn't been touched. It's also where we closed. We had that gigantic Feel Good Friday, and again, if you attended Friday, we talked about it.
Yep.
Feel Good Friday right up. We closed there. We gapped a little bit higher and then collapsed away from it. So we already know in this area, let me drop it back down to a 15-minute chart. We already know that we got something funky going on here with sellers. Now, it's not in the upper third, so that's kind of, we'd like it to be just a little bit higher, but it's already starting to move. So, this is one of those things that today, with all the bad negative news and stuff like that, could today be a day that we drop? Yeah, it absolutely could be. If you're looking right now at the ES, the NQ, and the YM, now this data is slightly delayed by about 10 minutes, but you're already seeing a 0.5% down in the S&P 500, 0.28 in the NQ, and then the Dow is down 0.5% already. Before we haven't even started, and what's the catalyst for anything positive today? It's us going after an ally with no economic news at all. So, Feel Good Friday retracement on Monday could be. People don't really like Mondays, so that's what we could be in for today.
Yep, I do want to pop over to the and by the way, the Nasdaq is down right now about 0.3%, and the S&P and the Dow are down 0.5%. So we are going to open a little bit in the red. Now we do have these levels. How can you play this? We talk about managing risk and not leveraging yourself up and then getting caught with margin calls. At Nadex, you never have to worry about that. At Nadex, everything is defined risk, defined reward. It doesn't matter whether you're trading binary options, call spreads, or knockouts. You know what your potential risk or reward are up front. Now, one way to play the Nasdaq, I'm going to open this up a little bit. The binary options, we know that we've got this level down here around, I'm going to call it 12,800. That has, and as I zoom in, it's probably a bit much, but we kind of got that. This is that retrace that we had. We opened. This is Feel Good Friday over here on the left. We have the open. From the open, it did nothing but go down. Got close to this 2,800 level. Rallied right back up to this 12,960 level. Now we've pulled back off of it. The question is what do we do from here? I would say it's only touched this 12,960 level, twice. Could it, if it were to pull back up, would this be a shorting opportunity? Could you potentially look to go, the short side on one of these binary options? And you certainly could if it came back up in this range. It'd be something to potentially look at. Down below, if we were to continue, open lower really hard, would there be support down here? And could you potentially play it from the long side? So today is going to be one of those if this then that days where
Mondays are always a little bit more challenging.
Yep, you just got to kind of keep your eye. But we do have these two levels in Nasdaq that could be kind of interesting, and you could potentially try to position yourself around those. Again, managing your risk all the way so that you don't end up like Archigos, the hedge fund. Let's take a look at oil. It's been volatile. It really has been.
Yeah, it had a crazy overnight. Right now oil is currently up about 0.76%, and again, that's after a little bit of a retracement. It's kind of one of those ones where we saw it really kind of collapse, and then starting at about the European Open again, it went straight up in the air. And the way we've seen this happen, we saw it over here. The European session has really been driving the price of oil, and then we tend to kind of retrace a little bit in the U.S. session. So it's very interesting to understand the Suez Canal is a very, very big canal for oil transportation, right? Pulling it out of the Middle East. So it's kind of one of those things. It's like, listen, if it opens, all of a sudden there should be a rush of supply in there. Could they have been bringing prices up to grab a great little short? And the answer is maybe, right? I mean, it's a level that we've seen before. We've seen a base here. We've seen price turn around. It got super close right now. And again, great movement in the overnight. And again, I would say that the U.S. market is more of the oil-based market than the European Union. But are we also in a scenario where, hey, listen, this could be coming back to the downside? Could it be rolling? Where what's going to happen once the U.S. trader steps in about a half hour? If we're sitting high, a retracement on a Monday is absolutely possible. No economic numbers today, kind of hard to grab. If you look at it right now, about 57% of clients are net long oil. Makes sense going into the open, but again, I wouldn't say that 57 is to the high range. Right. So I wouldn't say it's as clear of a rollover, but it's definitely a possibility for something today that you guys could look for. Maybe like in the call spread realm, something with smaller risk in there, because again, it is a level. We do have a bit of a confirmation that again, sellers stepped in here last time at $62 flat, and we got up to 61.75. So any type of a little burst, or even on a smaller time frame, even something really small, maybe on a 15-minute. Yeah, I mean, we already have a red, green, red kind of confirmation in there. See what the open does, and then take the trend from there.
So, I you mentioned call spreads, and again, everything that Nadex has is defined risk, defined reward. I just quickly brought up these daily call spreads. There's 5.5 hours to go, and these are the ones. If you click on a call spread, by the way, I'm just going to click on different ones. It shades the chart for you to know where the floor and the ceiling are, and if you're buying, it's blue, and if you're selling, it's red, and you can see that there are. If you were looking for a rollover, there are some call spread. There's a call spread in here where you could take it from the short side if you thought we're going to roll over. In fact, it's really kind of funny. We might be doing a bit of a hammer right now. I don't even know. But anyhow, you could see, what is your risk to if it were to go higher? It's pretty clearly defined risk. If oil were to sell off, there was this opportunity for you to potentially profit. So keeping an eye on oil, seeing how it does get digested here on the open as the U.S. retail traders get in there. I mean, I will say if you wanted to go the other way and you thought maybe here we are, we're gonna go higher, you could choose a different call spread and buy it. Because again, it's hard to say what we're going to do. Here's that level. I'm going to drag it out. The one that Brian was just talking about. We're kind of right there. Does it break through this level now? Are the sellers getting tired? I mean, that hammer is kind of interesting, and it's a green hammer. So I don't know if we see a reversal and we might see a punch higher. You could always punt. You could always go long. Again, defined risk reward. You know what you could potentially lose. So it all depends on which way you want to go, but you got a couple of call spreads in here where you could go one way or the other in a very clearly defined risk way. But look for opportunity in oil. It looks like it's going to be moving around today, and there could be some opportunity when there's volatility. All right, let's do one more thing and then call it a day, because I know that we want to get out of here.
I think it's important to point out silver.
Silver's the big one, you bet.
Yeah, I mean, silver's one that we've been talking about two levels, 25, 34, 25, and you can see we got, obviously on the smaller time frames, if we drop back down the 30s, you're able to see it. We had the Harry Potter trade last week. We came back up, got another one to go back down again. Finally broke through on the fourth hit, which we were expecting for. We got a little bit of a level low, and then ended up rallying back up again and using that same level up top. Since that time, it's done really nothing but go straight down. So it's down 1% already today, and the reason I feel like we need to highlight it is if we go over, and again, we talk about what the general public or what everybody's doing out there. When you look at this one right now, and I click on silver, right now 92% of clients are bullish in silver. 92%. So we talk about, well, I mean, if everybody out there is doing one thing, who the heck is selling them contracts on the other side? Think about that a little bit. When everybody in the world is like, oh, that's a great stock to buy, who's dumb enough to sell it to you, right? 92% of people, that is definitely an extreme range in silver, are all going long, and yet magically, what is silver doing? It is down 1% for the day. So I would say it's a little bit harder of a chart, and again, we're on a 30-minute, and we're talking about, kind of the overnight look, the candles on this one. It is quite wicky back and forth. It is a little bit, again, quote, hairy to look at. But I would say the last time we had that spike down, when we finally broke through that 25 level, and again, we are below 25 right now, we had it kind of turning around right around the 24.38 range. I would say look around 25.35-ish, where this black line is down here. There's going to be a support and resistance trap because everybody can say, hey, there's a spike right here, right? There will most likely be a support and resistance trap around this level. I don't know if we can get all the way down there today. It will require about another 50-cent move to the downside. But I will say, with this, how it's set up right now, losing 1% already in the overnight and seeing this large candle down here, it's very hard to figure out where those buyers are. And again, we spiked around. We're waiting for people to come in right now. But with the dollar it's basically flat right now. But again, we start seeing a little bit of momentum in the dollar. Again, that will continue to drive this down. Remember, silver is kind of the latch on for the inflation trade with gold. And again, gold it's down 0.36. So silver is advancing faster than what gold is today. And again, gold's kind of, here's the gold chart. Gold's kind of a mess as well. We got a level, I don't know, about $10, to about $10 below where gold is currently right now. So I think it has a little bit more room to run, but just something to keep on your radar. Again, if you're not accustomed to trading silver, jump over to demo and try some silver trades. See if you can understand how that heartbeat works over there. Because remember, everything has its own little heartbeat. But 92% in one direction is extremely high.
That is high.
Yeah,
that is
doesn't get much higher than that.
Yep. All right. With that, just a quick little recap of what we went over today. Nasdaq, we got a couple of levels in Nasdaq to be keeping an eye on. 12,960 above. 12,800 below, and if this, then that market. Oil, there were some interesting call spreads to take a look at. Once the market's open and the retail trader starts getting in there, you might be able to take a directional play, either long or short, as the market, once we're right at an interesting level for either a rollover or a breakout. Those call spreads, interesting way to potentially play that. In a limited risk, limited reward way. And then Brian just went through some silver and gold setups. Silver definitely could see some volatility, particularly with a lopsided sentiment in everyone looking for it to go up. All right, if you got any questions for Nadex, please email us, customerservice@nadex.com. You can also reach out to Brian. Brian is accessible. If you've got questions, please email him. He's there to help. Support@keeptradingsimple.com. With that, I want to thank everyone for joining us this morning. Brian and I will be back tomorrow morning again. We'll take a look at what else is coming our way later in the week, and any other important news events that we might want to be paying attention to. With that, want to wish you all good luck in the markets, everyone. We'll catch you later.